Yeah, so I thought we started a bit late, but actually the cat issue has been resolved because I had my window open and I heard some cats fighting and my dog running more or less towards it. Because I mean the dog can't break really out, break free from the garden, but the cats can obviously. And there are some nasty mountain cats here, so like the cats from the neighbors and everything, and they all have those big scars or missing an eye or anything. So if you hear cats fighting here and you know your cat is outside, it's always a bit scary because it would be his first fight, and I think it was. He looked really shocked, but he's fine. Good. Cat issue resolved. I want to talk about the market real quick. I have also some new ideas on the stock side. Oh, Starlink is pissing me off again. Give me a second. Where is the chart? Oh, it should already be, but it's not. Okay. So let's start with this anyway. So screen should be shared. And I don't know what TradingView's issue is right now. At least looking at this one tab here. What are you doing? Come on, open the chart. Yeah, anyway, we can start with crypto until this is resolved here. I'm still short BTC, and I said in one stream and in probably several videos, so just checking, tech check before I start talking. Everything is fine. You can see the stream, you can hear my voice, just to be sure. Good. Still short BTC, and I said once we get a decisive break above this range, and we pretty much didn't. I mean, we closed above, but I know crypto, and yeah, I didn't feel like I should TP from my short already. And to me, it doesn't really matter if I wait for a little bit higher or even get it a little bit lower once we reject again. And we haven't really cleared the support and resistance level. Plus, I'm still in big longs in crypto, and so it's still kind of nice, comfortable to hold this short. I know I need to TP at some point. Best case for this idea, best case it's somewhere down here, or if we really get a decisive break above. And to me, even though we have those closes above and we opened up pretty much a bigger range here on ETH, I still don't fully trust it, to be honest. I know crypto, I know how it's behaving. Everybody wants to go long all the time, and I'd rather have a little longer. I have to short a little longer and round trip some potential more gains, but it helps me a lot to stick to those long ideas. Coming to those long ideas, I have my stop loss now hard and fixed on ADA at break even. And I'm also most likely my entry on ETH is somewhere in this area. I will cut it around break even, most likely. If we come back to this area, I will watch the reaction, but I have it fixed at break even on ADA, because otherwise ADA is also almost a full percent risk, and I don't want to wake up to a full stop loss on this one. And I also still can simply re-enter. Should I get swept out here, I can simply re-enter, so there's really no stress about that. And I rather be safe than sorry here. And I have it still like loose, soft on ETH, because there's still more room, and I know that ETH is not, it is violent, I don't want to lie, looking at those liquidations here, but it's not the same, it's not at the top. So the liquidation is probably not that bad, not that quick, but at the same time, willing to cut it around break even. It's more like a spot position, even though I would consider both spot low leverage, but yeah, one is soft, one is hard. And this is the reasoning. And also, as I said, still in the short, still waiting for further developments, because this could easily turn out to be just like a little counter trend bounce and further down we go. And my main thesis for all markets is pretty much still down. And that's also the reason why I'm long the Nasdaq and short the Nasdaq and short all of those, because when I share an idea of a major, and for example in this case the Nasdaq, if I expect the Nasdaq to go lower, I expect the whole tech sector to collapse because it's connected, right? I mean, it's the 100 biggest technology companies, and pretty much all of them are listed in this one. And for this simple reason, I not just take this short because, for example, I took this short on a 3% stop loss because I said, okay, good. Should we sweep the low? I don't want to get stopped out because I was RR greedy. Sometimes we do sweep it and sometimes we don't. In general, the Nasdaq likes to do double tops for major tops. But hey, we could have swept it and then go up here, and I would have been stopped, and then we go down. So I give it a little more room, and it's pretty much my main play. You can consider it my alpha play. And from this point on, I can then simply add to this idea via proxy plays, which is in this case beta plays, and Apple, Palantir, Meta, okay, maybe IBKR, maybe not so much, but still it's connected to the US tech sector. And you see the tech sector collapses, IBKR also collapses. Obviously, I trade those charts on their own, and that's really the beauty of this whole strategy, because you see a major giving you signs of downside, here in this case the Nasdaq. And then you look at Apple, for example. This idea, by the way, has been shared with a mentee of mine. But still, you see this, and then a retest of the supply, and it happened way later. So once this idea started to showing me, okay, I'm on the wrong track here, it starts rolling over already. Apple did this counter trend bounce and gave me another entry at the top. Obviously, the stop loss is wider because it's more volatile, but in the end, it's about RR because the potential reward is also wider. And so shorting the US tech sector is pretty much, this is the whole idea, right? It's shorting the US tech sector. And I don't really care if it's Apple, if it's Meta, or if it's Google. And I mean, this one was super clear. I mean, we had this decisive breakdown, and then we have this liquidity grab into this gap here. You know, guys, gaps are just so beautiful in stocks. They have such a high win rate. And if I see a gap and I want to short the US tech sector, and I see this play here for a potential very ugly head and shoulders here, the head and shoulders of the devil or whatever you want to call it, and there is a gap in here, this is a jackpot for me, right? And I also tried to short Google. We talked about this. I tried to short it too early, took a stop loss here. But yeah, that's the game. It's shorting the US tech sector, and from those 1, 2, 3, and if you consider IBKR and Palantir as well, 5 plays, 1 didn't play. But the idea was shorting the US tech sector, and even like it seems 6 ideas and maybe even 7 looking at the SPX here. And so the US stock market is signaling weakness, but at the same time we are now at this range low here, because if we picking the right one this time, if we drag the range here, this could be considered the range, and this is like the first real test. So I could take a profit of this tighter position here, and I might do if I get signs of strength. And this is the first real test, because once this starts breaking down, everyone and their dog will see that the US stock market is beginning a downtrend. We already recognize this very early here, but the majority will see this as a major higher time frame break of structure, and then a real selling cascade usually happens. Or looking at the Nasdaq, we break this down real quick, maybe next week, come into this demand and bounce one more time. So there are many options again, and we don't have to predict the exact move. We just need to prepare for both cases, for the three cases of up, down, or sideways. And I'd say the wind is blowing still for down, to be honest, and that's why I'm still short. And should this idea play, I mean, we have already an 8% correction or 9%. This is a huge correction. So if the uptrend continues, this is already maybe the correction that we wanted to see, and now it's over. But putting everything into context, I think expecting something like this is not that unreasonable. And that's what I'm prepared for. But the thing is, should this idea now be wrong, you see, I'm pretty much like, I'm really in from the Pico top here. And I can decide to TP here, I can decide to TP here, or I can decide to simply close the position at break even once we come back up here. Because looking at the structure, should we really come back up here, we probably go a bit higher than those highs. Because a triple top would be the first of its kind on this time frame. But yeah, so in the end, I'm in a good position. I might round trip some potential unrealized gains. I might not. I might make more of them. We will see. But I'd say this is a good point to start from. And looking at the Max 7 ETF, it's really like it's showing weakness since here pretty much, since we broke this down, and it's really not showing any strength. And the Max 7 were pretty much the train that pulled the whole US stock market, this whole cycle, this whole movement pretty much also since 2022. I mean, the Max 7 did 125%. So they really made a good chunk of this whole bull run, and they signaled weakness here, and this also added confidence for shorts. And again, this was already showing weakness. Apple and Meta provided us with a little spike to go short. And this is it pretty much. It's reverse investing, if you want to call it like that. Also, crypto majors, we have more or less a breakdown. Also not looking super convincing, to be honest. But we will see, time will tell what Tether is up for. The idea still is valid. I mean, still range high, still targeting the mid-range or the range low. Same idea, really. USDC, not really aligning for that. Pretty much still in the middle of nowhere, but hey, we could also reverse from here. And ETH BTC, for example, retesting here the supply and the support and resistance level from below, rejecting from here already. If the weekly candle closed like that, it would look ugly for everybody looking at the weekly candle. But if you look at the 7-day, it doesn't look that ugly, does it? And this is also, it's the beauty of looking at different time frames, but it's also the trap, because you can simply choose the time frame that aligns with your bias. And this is obviously not what we want. We want to get a clear picture. And a clear picture is that most people look at the weekly, and if they see this candle and if they see a close like that, they will think it's going lower. We have no decisive close above. But it also signals that whales were not willing to hold price up here. But if you change time frame, we see that the picture is not that easy. Many time frames already closed above. And that's why I don't really like the time frame skipping too much, because you can simply adjust it to your bias, right? You will always find a time frame that aligns with your idea, but this is not what this is about. We have a local break of structure in a higher time frame downtrend, in a very high time frame downtrend. So ETH is definitely losing value ever since here pretty much against BTC. And we had a little change of character here, if you want to see it on a very high time frame. And now we are still in this downtrend. And this was the first test. It already rejected us hard. And the real test really starts here. So this would be my TP target for my swing longs. And we haven't even reached it and already reject super hard. So let's see what happens here. If one would look for continuation longs, it will probably be a good time right now, because we have a range in a high time frame level. We have a break above. We retest the range high, like I wrote in the discussions channel. Retest of the range high. And this is not something I would consider a super strong setup, but aligning with those majors like ETH BTC or Tether dominance at the extreme range high here, why not trying to get in with a tight invalidation? And this can be, for example, this is a scalp for me. I took this trade this morning as a scalp, as a retest of this range high, majors aligning, and it stands against my BTC short, and it adds to my ETH or altcoin long ideas, and it's scalp size. So I don't really care if this idea fails. It doesn't really touch me, but if I'm right, it makes me 3 times of what doesn't even touch me. So it touches me a little bit. And if I can trail this trade higher because we maybe get a very impulsive move higher. Could, then this position will be a super nice one to be in, because I can TP this one, for example, here, and try to push the swing trade even a bit higher, or we reject from here and I TP from the swing trade fully and this trade fully. You see, I always try to position myself in a position where I'm able to react to everything, because I can predict the future. I can only predict probabilities. And so having a position for every potential outcome is just the best thing you can have. And the funny thing is, if you consider this now the new range, we are now at the middle of the range, because with this break above, we officially invalidated or broke above this range, and you can pull like that. And then we are back at the mid-range, testing the old range high. So I would say the setup is not that bad, but as said, it's on scalp size and it doesn't mess with my higher time frame ideas, so don't really care. So also why I pull those ranges, because people think the FIB tool is something super magical or super fancy, special, whatever. And yeah, algorithms are programmed with it, but in reality, it's nothing but a range measurement tool, right? So we pull it from the low. Yeah. Also a question, do we pull from here or from here? In general, that's why I like the range tool a bit more, because people think they need to align this perfectly on the dot and we need to reverse perfectly from the 0.5 line. And this is simply not the case. It's a tool for marking out areas. And the range is, even though I make very thin lines to keep my chart tidy, the range is making this way clearer. We have a range high area, we have a mid-range area, and we have a range low area. And what I've seen for many people, it's way easier to say, okay, this is the range low. We maybe sweep it, we maybe not, but I want to trade the range low and I want to trade the range high at those extremes. And for many, it works better than thinking the price needs to reverse perfectly from those fib lines. And so yeah, I'm in the scalp for those who are interested. I do not recommend doing that if it messes with your higher time frame ideas. If you can separate those ideas, why not? And yeah, exactly. There were also some new plays I came across today. This is a form. It's a, what is the full name, by the way? Form factor. It's it's a quantum computing related company, but it's more or less in the quality, making sure that the quality is right. So if for example somebody produces a semiconductor, this company is producing the systems to check if everything is okay to test, for example, the product in the end. And you see, ever since May of 2025, they're doing kind of well here. We had this huge accumulation. I like those charts, you know that. We have like this valley of death, if you want to call it like that. Then we have usually a very harsh rejection from the range high. And this is the time when to get long for a play like that. And yeah, I came around this only today, so I couldn't buy it here, obviously. But I can wait for a pullback, because after such a violent move, it's very unlikely that we continue this move straight up. If we do, bad luck for me, but usually we come back and then below 60 here. And also, this is my general area of interest. I don't need to refine anything here to like the hourly time frame. Why would I? Because I can just wait for price to come here, show me its hand, show me a change of trend, show me a change of character, and then I go in, like I always do, and it's much easier. So once we come in this area of retesting those old highs within this big demand, below the 60 psychological $60 psychological key level, maybe even 50, below 50, I will start to scale into this play if I get my signs. And here, for example, we have the value of death in the making. Maybe it's Skywater technology, also quantum computing related, and we have pretty much maybe the same structure, right? And if you remember how this other chart looked, oh no, the drawings finally appear. Why is it so slow today? Hey Chris, hey Rooney, hey Victoria. Okay, so tech check is all right. just want to be sure, because if I look at the chart, I oftentimes don't see when something is off. So yeah, back to the chart. As said, remember this one, Valley of Death here, launching highs here, then, I mean, this is probably minus 90 or something. Yeah, something truly ugly for early investors. And then we suddenly keep ripping from there. And let's imagine that this company has a similar future. If you just look at the chart, we haven't really swept this high, which could be a sign that we might do that in the not so distant future, or we don't, and we just reject from here. But either way, below 20, this one looks super attractive, to be honest, because remember ETH, we have the range accumulation here for a very long time. We have a decisive break above the range. Once we retest it in this demand, also here in this higher time frame VWAP, volume price, average, and then the $20 psychological key level, dipping right below it, getting an entry sign, breaking momentum or shift in trend. And then we could find exposure in this play. And it will still be a very violent play where you have a very wide stop loss. And it's a very speculative play, right? We talk about narrative-based stocks. And if you have read my PDF here, this one, the 10% monthly return framework, you know that this is only a small chunk of my portfolio, but obviously if I, for example, risk 3% here and it does a 10x, it's also 30% from, like, for example, 30% of my portfolio, which is a very nice return if this comes to play. And I like those plays because it's certainly possible that this happens. And it's not your shit coin where you have like 10 people controlling the whole coin, 10 entities controlling the whole chart. It's an actual company creating actual revenue, being regulated and everything. And even on sustainable volume, I would say. And so it has a lot of advantages over your average shitcoin. And quantum computing might be one of the big ones for the next years. And so it's wise to have some companies in mind here. And I added those two just lately or today. Sky, what was the name? Skywater Technology and Form, what was it? Form Factor. Yeah. And you see how well they did those past months, and they didn't even really correct while the whole stock market, the whole tech sector got wrecked. And also those other quantum computing companies. You remember Rigetti? It had a similar run when I entered here, but it also had a way more volatile pullback here. Yeah, so these things are super volatile. And I actually had a third one, but I think I didn't add it to. Ah, yeah, Micron. Didn't add it to the list. Yeah, similar thing. A little longer around this thing here. And since April of 2025, it did almost 700%. And it didn't even really pull back. If you look at the monthly, we had some pullbacks here, but it's nothing looking at the chart. While the whole tech sector corrects, while there is a global war raging, and this company is just like straight lining it. And the question is why? Because it's certainly not something sustainable or organic, but it might come back. And even though it doesn't mean just because it went so crazy violent up now that it will do that again, but there's a good chance that when we come back to this lower demand area here, whenever that is, that we can at least trade the range, because in the end, this chart, we maybe go a bit higher, we maybe not, but let's say this chart in the end, this is an ugly arrow. This chart looks hopefully not like that. But you know what I mean, guys. Let me draw this a bit nicer. Like that. We could still trade such a bounce from here. That brush. which is also a very, very nice performance just by trading the range again. And while we do that, we also expose ourselves to a very, very powerful narrative and a potential very interesting company in that sector. It's a semiconductor company, but it's also involved in quantum computing stuff. Let me just add this. Move. Or did I add move to the chips? No. Let me check. Yeah. So move semiconductors, everything correct. Also involved into quantum computing development. By the way, even Google is involved and IBM. Everybody is looking for quantum computers because it might be the next big thing in technology. And so having people that are in the supply chain, or for example, also in the product testing, or what is it called actually, like the final step before you release the product, you do a security check. Yeah, pretty much. Maybe I wrote it down. Quality control. Yeah, it's quality control is the word I was looking for. Yeah, and if you somewhere in this supply chain, let's imagine quantum computers are the next big thing. It's probably not that one company that builds everything and that one big company that like does it everything on their own. There might be one having a big breakthrough, like compared to the others. But there will be many companies who supply this company and who are involved in the supply chain. And so we might not catch the big one. We try, but even if we don't, you can still go further down the supply chain and get exposure there. And while all of this is a very fundamental like way of reading it, the main thing is still the chart. If the chart is not telling me I should enter, I don't enter. But if it does, it's me exposing myself to a very interesting narrative, plus simply taking a trade. And as said, if in like the move thing, if you go down here and I just trade the range for a few 100% bounce, I'm fine with that. And if the company fails after, I don't care because I have taken my profit, I have moved my stop to break even, and that's it. And that's it. And so yeah, new interesting companies. Also Etsy, Hoodstock shared it with me. You know, guys, the good old pump and dump chart. We have seen it many times in the stock world. We came back to this demand. We are also at the point of control. We spent 900 days here, and you know, guys, 800 to 1,200 days is a good time for accumulation. We broke the high time frame trend. We have a local changing character here. We have a clear invalidation for that reason. Below those lows. Otherwise, if there is no change in local character, obviously stop below here. But now we play it tied with a 30% stop loss. But yeah, in the end, it's about R. And if we go for the 0.5, filling those big gaps up here, already a very nice R performance. But obviously, level by level, we have to first overcome this and this and this. But I think Etsy is also an interesting one because I shared this video here, and Hoodstock told me about Etsy a day later because he knew about this company somehow, and it's making handmade stuff. And if you watch this video, by the way, it's very interesting. It's just a very refreshing, interesting take because everybody's so negative all the time about the future and AI and we're all gonna die and blah. But why not seeing something positive? Or why not, if you look back, human history is full of dark spots, but eventually we always found a way. And to be honest, life is easier and better and more comfortable than it ever was. And so is it really that bad? And maybe AI is also bringing many, many good things. And yeah, if you watch the video, you will know what I mean. But it will also maybe mean that people don't wanna be like part of this industrial crap anymore. Like if you look around, everything that gets produced is just industrial. Most of the things are just industrial crap. They're built for a few years and then to be trashed by the same company using the resources again to build more crap, because it's better to sell more often than something that holds forever. And this is the mentality nowadays, unfortunately. And Etsy, for example, is like Amazon for handmade stuff. So everybody can pretty much run a shop there and sell his handmade stuff. And my fiance actually, when we were living in Germany, she ordered there sometimes, and they have, if I remember correctly, beautiful things. They also have had a beautiful pump in 2020 and 2021, and then they had a not so beautiful dump for investors. And as I said, 85% back at the man, point of control is around, and we spent 800 days already here. So it might be time for Etsy. It might not be time for Etsy. We will find out. Not so in the not so distant future, actually, I think. So yeah, that's also a new one here. And other than that, nothing has changed. IBKR is developing kind of nice from here. Still going down after this re-rev. PayPal kind of volatile down here in the level, but it was to be expected. PayPal probably needs a few hundred days down here. If this is not a liquidity grab, so we could also see this as the range and this is the liquidity grab, but it takes already quite a while down here. And so if this is not the liquidity grab, but the accumulation that starts down here, it might take even longer here. So one we need to treat with patience. And yeah, I don't even want to open it, but here it is. Circle did a 170% pump from this non-existing low here. And I don't want to open this chart because I wanted to enter here once this broke out, and I said, yeah, I could add some crypto risk exposure, but I didn't because I said, okay, I have already enough risk in crypto right now for the current situation. And really a day or two later, it started ripping like crazy. I mean, now it's definitely not the time to go in. We all know that here in supply and everything. Still, if we go back to this gap, I still might want to enter, but it will all depend on how the whole market is looking, because it's minus 50%. But still, if crypto is not at the bear market bottom, so BTC not below 40K, this might go even a bit lower from here. The initial offering price was, by the way, at $35. So there are probably a lot of big investors protecting this price, but we will see. We will see. But it's one that hurts because I wanted to enter in my strategy actually told me, but then the other part of my strategy of not taking too much risk in a single market said, don't do it. And compared to all of my other crypto positions, this would have been by far the most profitable one. So yeah, it's not about perfection. And in the end, I mean, nothing is lost. It's just opportunity cost. But yeah, this is the reality that happens sometimes. Can't catch them all. And other than that, the list is what it always was. I started scaling into Xiaomi here. They're actually developing interesting robotic stuff related to AI. And yeah, my edge is allowing me to enter. It's not huge size because this could also go way further down. And I tried to get my average somewhat like this, but I started scaling here and got dumped in my face immediately. But that's why I start scaling slow, obviously. And I do that in Hong Kong dollar, which is very stable against the US dollar. Here we go. So really stable, I would say. It's a 1% range pretty much. And they cap it, so it's pretty much connected to the US dollar. And because the US dollar against the Hong Kong dollar is up here, it pretty much favors buying it in the Hong Kong dollar. So if the US dollar is losing against Hong Kong dollar, I make even 1% more on top on this position if I exchange it back to US dollar. But I mean, if it's as stable as that, doesn't really matter, but some currencies are a little more fluctuating, and then you want to think about that, because if you make a 50% gain in the base currency in which you execute is losing 50% of its value against like the currency you need for your day-to-day life, you pretty much made no gain, no increase in buying power. yeah, so Hong Kong dollar makes sense here. And I also think it's the only way to buy this one. I'm not sure. Yeah, so this is what's happening. Crypto slow. Let's see. We have BVOL probably hitting tomorrow. So let's see how Sunday, the good old Sunday will develop. Mm-hmm. You ask about the demand area from here. Yeah, I just wanted to highlight what a demand area really is, because people think that this is the demand area because, I mean, the block is touched, so it's a bad example. Give me a better example chart. So people look at this and they say, this is the demand, right? This is because there is a block. And yeah, it's an order block. It's technically demand. We had 4 weeks of this one red candle is 4 weeks of consolidation, and then we had a big pump. So somebody accumulated here and then pumped. This is what the red candle and the green candle is telling us. That's why this is demand. But we want to have the highest potential, the highest probability of being right. And then if you look at this is also one big fat demand, because we had a, even like considering this, but I mean, this is the extreme demand. And we had like once when started 2020, 2020 we started, and till 2025. So this is 3 years of ranging here with some spikes above. And if I go to the 12 month, well, okay, this looks ugly, but then this is, you see how compressed this gets. Maybe I get a better example. Each candle is now 10 months of time spent there. And the longer we spend somewhere, I actually can't really make it work. The longer we spend somewhere, the stronger is the accumulation, because imagine somebody bought within here, build a position, accumulated for maybe the range high, maybe higher. He will protect that, and he might even push price one more time down to really fill the rest of his positions. Even though the stock market is not that easy to manipulate, but in general, this is the major demand. Then you have this demand, which is now 1, 2, 3 months of consolidation. We could consider this an order block or whatever, but it's 3 months of consolidation and then a big pump. This also aligns with this range high here. Like the ETH chart, once we go back down here, we have a range. So let me remove some of this and make this a little more clear. Because again, we have this as range. We break above the range, we come back to retest the range high, which is also here our demand before the big pump. This is a level we can look at. We have a clear invalidation. Should we lose that? We go for the extreme demand most likely. And the funny thing is, should we get this pullback, we don't have to enter immediately. We wait for confirmation for a breakout, for example. We can put the stop below the low, or for a shift in trend, I mean, we put the stop below the low. If it fails, this is like then our invalidation point, and we most likely go even lower. And the longer we spend somewhere, so the demand gets stronger by two things: time spent to accumulate, and then the move that follows. Because after such a long time and after such a strong move, this whole block here, like the whole lower end of this thing, is super strong. So it doesn't really matter when we come back here, we will most likely get a bounce to the range high again. This is super strong. Only, I mean, if the company completely fails, I don't know, the headquarter burns down or whatever, I mean, you don't want to, you don't can predict everything. It's like, it's a chaotic world. But in general, the likelihood is super high. And obviously we need to refine that. We can't just say, okay, this is the one level we want to enter. We never get there, we get front run. Or we say we enter here with everything we have. and it goes lower and then we react. Especially because this one is so volatile. So we refine that, but in technical sense, this is like look, I don't know how to other to explain it, but by looking at how many candles are stacked next to each other, like the compression of price, like so many candles, like compared to up here or compared to here, it's just one candle. There is not much. But this is a cluster of many orders being filled for a very long time. So this is a very strong demand. And that's why I let it start from here. Obviously, I could also do it like that because I know it, but because I do the educational stuff, I want to make people see that it's about time spent for a certain thing. But also, yeah, but as said. I will come to that, Travis. Just let me finish this topic. Does entire area play a role in stop loss setups? As said, those plays, they are so volatile, you can't, in my view, you can't really do it that way. Because if I say I enter here based on that and I put my stop loss below the wick, it's a 30% stop loss. And then the annoying thing is that if I get stopped, we might just go here to this area and then bounce again, and then it just got stopped out. So how can I avoid this? By letting the market show its hand first. And so the whole area is important for me to know, okay, we expect a reversal from here because $20 key level, this wide area, price comes down. Where's my brush? Give me a brush. Price comes down. It shows us a shift in trend or a shift in momentum, and it might even do this, right? Many times this happens. Then we do something like that, and then we go back for the range high. Once the market shows its hand, we can say, okay, we want to start scaling in, and we don't go in full size. We do this, and we keep a bit of room. We don't play it like that. We are not greedy. We know when it's super volatile, we keep a little more room. It's still a very reasonable RR to back to the highs, and should price even dip a bit lower than I originally expected here and do this, we're still protected, and we maybe, if we are good in scaling, we can maybe even better our average a bit more and get a better R out of it. So the stop loss really develops once price action develops. We can't know yet. In my view, everybody that's saying, I know my stop loss beforehand, either they know something I don't, or it's just a different type of thinking. But what I see, people want to enter in this, then they get wigged out. Then the question is, do you re-enter or not? And why all that hustle if you can simply wait for the market to show its hand? And the funny thing is, this works especially good with stocks. Like I said before, this whole execution strategy, for example, in crypto, doesn't work that good because crypto is much more predatory, and they want to make it a bit harder, or they make it a bit harder for people. Because if you, for example, do this on ETH, you can wait for something like that. So for this breakout here, then you enter, or for this very steep one, and then you enter. And in this case, it played super good. But this is also the reason why I'm still a bit skeptical, because usually the good crypto entries, they don't work that well. Like you have, usually if a low is coming in, they make it a bit harder to really get your entry. This time it looks so easy to me. And also the whole trend line stuff and everything works so fine. That's why I'm still a bit skeptical, because usually those kind of entries, they're not that great in crypto. So in crypto, it's easier to have something predefined, still keeping it wide, maybe adding on confirmation or on retests like here. But on stocks, as said, this whole strategy works super well. And then once we are in this area, we can then define the stop loss. No, I don't, simply because this would be a zero-sum game for my own portfolio most of the time. But I try to keep it balanced so that initially, so for example, I open two positions, like one short, one long. initially one goes up 3%, one goes down 3%. If I do the same size, nothing really changes. My portfolio is completely hedged, but it's also not like efficient because I want to make money, right? But at the same time, if one then goes up, for example, instead of 3 goes up 30%, and one goes down only 3% and I get stopped, I pay a 1% stop loss, and the other position potentially paying me then 10R, which is on 1%, which is then 10%. So I could, but still I want to be more efficient, and I can be more efficient by simply having a predominant bias. And for example, my predominant bias is since pretty much late last year, is short US stock market. And I am short the US stock market, and I'm more short than I'm long. Those positions are, from a size perspective, way bigger than, for example, any longs I've taken. I have also taken, if you remember, Loy, whatever. And it's hedging pretty much my short exposure, because if this is going up, most of the time the stock market is also going up, which is then negative for my shorts. And right now this is going down, so this is now in a loss, but this is going up for my portfolio, you see. And at this point, for example, now it gets super complicated, I guess, but I risk, for example, 2% here, and I only risk 1% here, or even less. So if this 1% is if I have to pay this 1%, it's the price I pay for being hedged, and this is already at this already at 2R. So I took this one on 2%, so this is up, yeah, around 4% right now. So the hedge is working, but I have a predominant bias, and now I pay a little price for being hedged. But the predominant bias is important in my view, because if you don't have, I mean, trading bias free is good, but if for example, open longs and shorts always the same size, I haven't tried actually, because I always have a predominant bias. But I think it's also just confusing. So I would always do analysis first, and then with a good proper analysis, you will have a proper bias for the months to come. And then you have the predominant bias, and most of my portfolio is now allocated for that. It's also what I said of, if the market is rising so much, I sell my investment positions, for example, because if the stock market is within 1 year rising 60%, or in this case the Nasdaq, it's not very sustainable. And if I keep all my investments and only short, the short will probably not even pay for what I pay back with my investments. So I build more cash, and I sell even a bit more with my short. So my predominant bias is selling my investments, shorting a little bit, and on the way down, to be able to hold my short better, I take some longs to be prepared for a potential bounce, or for being completely wrong, because I mean the market could just go higher here, another like 30%, and my short idea is completely wrong, and I don't want to be completely off guard. But I have a predominant bias, so I don't open positions with the same size against each other. And if you, for example, look at this BTC short, it's right now sitting at 20R, and it's somewhat up 20% for my portfolio now, still unrealized profits. And obviously I don't take a 20% risk long now in crypto. My overall crypto risk exposure is 3 to 4%. Now with ADA removed, I could say it's 3%. And these 3% stand against the unrealized 20%. So I lose this trade. We are now at 20%. This is easily paid if I lose the ETH trade. You see what I mean? And that's I never take a 30% trade, but this position is up 30% unrealized. And a tiny fraction of that stands now with a long against this short. So predominant bias, once again, is right now lower, to be honest, because higher time frame structure is broken. And usually once crypto breaks higher time frame structure, liquidations increase fast and quick, if you remember past cycles. Doesn't have to happen. That's why I have my long still, and I want to profit it either way. But at the same time, if it does, my predominant bias is right. And yeah, structure is broken. So no reason to be overly bullish. I hope this made sense. If something doesn't make sense, Travis, or I didn't explain it well, just tell me. We will figure it out. PayPal, I scaled right away because the opportunity is just so good. Look at PayPal. And I dipped in my toe, right? Because we haven't had a break of structure. But at the same time, such a violent move down after a almost 90% correction. Then within a few days, we had this another 30% correction. So dipping the toe in here makes perfect sense. For the reason of PayPal being a good company that's globally used by millions of people. I don't know about profitability and I don't care a lot, but in general, I know the business model is kind of solid, and now venturing into crypto and all that and even applying for banking licenses. So I see this company somewhat undervalued from a narrative perspective, plus this very violent dump. And I know very violent dump, I mean 30% in a few days is not nothing. They get usually retraced pretty quick. And that's the reason for a faster execution here. And we had this 25% bounce, but it doesn't matter in the bigger context. I mean, look at my trade, it's not even close at 1 hour. But ideally, I get more size on confirmation once we break this trend line and maybe even able to scale in lower. That's why dipping the toe in very slowly makes sense here for me. Yeah, so you have to differentiate because for example, on interactive brokers, my whole strategy is pretty much what I've written here in the 10% monetary return framework. It's a combination of long-term investments and long to mid-term trades. So I don't take any scalps on IBKR. I do scalping pretty much only crypto, simply because it's much more margin efficient. I can play with higher leverage and everything. And yeah, don't see a reason to scalp stocks. So I only trade stocks and commodities on IBKR. So it's a combination of long-term investments, mid to long-term trades. And I don't assess my performance, for example, in like the typical trading stuff, like win rate, RR, and everything is much harder to calculate because IBKR is not showing this naturally. And the PDF you said you can download, I did that, and I looked at all the data myself, and I figured, okay, I don't want to do this, so I fed AI with it and said it should calculate all those metrics for me, and it did that. And I think I posted it late last year, or was it early this year, a full performance analysis, and this was like 80% win rate almost, with all those stats. Now the win rate is probably around 60 or whatever. So I paid some stops. So the run I had was amazing late last year with this account, and yeah, it was the stars aligning, everything. I did everything perfect, and yeah, it's pretty much not always like that. So my win rate probably went down a bit lower, but I'm not doing this on a monthly basis. What I'm really interested in nowadays is my monthly performance, if I can still keep it up. And as long as everything is somewhat in a normal margin of error, I don't bother too much with doing all that, because to be honest, I'm not the guy who loves office work and spreadsheets and that stuff. So I pretty much only look at my monthly percentage return. And if it's in the margin of error, if it's showing me something that makes sense, and usually it does, because I don't have those crazy mistakes where I blow almost my entire account or anything, there is nothing for me to dig deeper into. And so I just accept my monthly return. And it's a very difficult metric to evaluate because it's a fluctuating P&L, right? So you look at it and it's one day it's up, it's always measuring from a certain day to now. And it's difficult to say if your current, like the trades you did this month actually worked out, because trades from, for example, 3 months ago may be doing well and they balancing everything out. So you don't have this, or I don't have this very precise performance evaluation for this account. Yeah, but I also don't feel like I need it. I have my performance in check. As said, if there is anything completely out of the order, I probably have to check, but this is not the case for me. It's to be honest, it's only getting better. And so the only metric that matters for me is if I reach my monthly percentage goal. And then you also have those high time from long-term investments that are sometimes super volatile. So for example, if I look at Moderna here, my fluctuating P&L, it was one of my biggest positions. We pumped over 100%. I TP'd 85% and it was still one of my bigger positions. And then it went down 33%. I did nothing wrong, yet my fluctuating P&L obviously went down. Same story for Rigetti, for example. It went up from here when I bought, it went up 300%. And you may be surprised, but I didn't sell the perfect Pico top, but I round tripped some of those gains because I waited for a decisive change of character. I sold a bit here, which was too early. It broke down. I sold more here, which you would consider too late, but in the end, do you really care after such a move? And still, if I look at my fluctuating P&L, it's obviously dragging my portfolio down. I wouldn't consider this a mistake. So many things don't really apply the same way like you can do, for example, for a very simple trading account where you just open a position and then you close a position. Then the whole stats make a lot more sense. But if you want to do that for your investment mix account, whatever, as well, you can, as said, get the PDF and feed AI with it and tell it what it should calculate. For me, it worked super well, but obviously then this AI knows all your private informations, which I don't think is a big issue because they will know it anyway if they want to. But you can do that. And for example, for my crypto trading account, it's way simpler because I have simply a defined amount of margin, which is 1/10 of the size I trade with this account. If I have then a monthly performance or a monthly gain, I remove the margin that is uh, above that initial margin. Why? Because I want to keep my exposure to crypto low, to crypto exchanges low. I don't see any reason to buy higher time from crypto long right now and put it onto a wallet, but I would do that if I buy long-term positions. And all those short-term positions, I just shave up the profits and I keep the margin 1/10 of my size on this exchange. So the stats actually make a lot of sense. My win rate makes sense. My P&L makes a lot more sense. And also, for example, the main exchange I use is BitGet, which is only showing realized P&L. And also, if I compare it now to my IBKR is up this month. My BitGet is pretty much at -1% or whatever, which is probably fees or whatever, because I didn't really do anything because I executed ADA in February. I executed BTC in September, and I executed um, ETH on Kraken Pro. And so in the end, now it's showing me -1%, but I didn't really do anything to this account. not anything of significance. I also do some some scalps with this account, but it doesn't really affect P&L that much because the size is way lower. And you see, there are so many complicated variables that if I would want to figure everything out, it would probably take a few hours per week, this alone. But this doesn't, in my state right now, it doesn't really affect my performance that much, and that's why I don't do it. The question for you is, what is serving you and what is not serving you? If you still lack consistency, getting all those metrics might make a lot of sense. But also be aware that those metrics are not everything, because, for example, with a solid investment portfolio, like for example, I explained with IBKR, you can apply those metrics, but if it's positive over a long period of time, why would you care? It's not like a prop firm account where you have to deal with those stats all the time. In the end, we are here to make money, and if it's possible without doing all those extra work, why not? But for real trading purposes, also for scalping and all of those things, from a very technical perspective, it makes a lot of sense, because you see your behavior, you see what you do, and you see if you keep on doing the same mistakes. For example, taking profits too early, cutting losses too late, all that will be reflected in your average R, in your win rate, and all those things. Also, the amount of trades you've taken. This is one I forgot to mention earlier this week. It's super important to see how many trades you've taken, because you might have a month with, for example, 20 trades taken, and then you have a month with 5 trades taken, and the performance might be super different. And the question is, did taking more trades lead to a better result, or did it not? And all of those things in your early stages are super important to figure out. I dealt a lot with spreadsheets and with all those numbers until I figured, okay, I don't need it anymore. So if you feel you need it, and if you want to see your data, and you do that with IBKR, download this PDF, feed it to an AI, or calculate it yourself. It's possible, but I guess it's probably a bit of a headache, to be honest. But it's definitely possible to let it calculate it. And then also think about what kind of positions are there in, because as said, for example, if I would want to calculate my percentage win rate on my Bitgate account or my average R, it would be super difficult to differentiate between those scalps and those higher time frame plays. And also this Bitcoin play, which is still running with unrealized P&L. If I TP this one now, my performance will be for the my performance for this month will be 20%. If I TP it immediately, it will be 20% this month. But I didn't really make this money this month. You see what I mean? And all of that, it's like if you swing trade and you hold your trades for several months, all those trading metrics for intra-week, intraday traders, they don't really matter that much, or they're harder to apply. And figure out what helps you, do that, but don't spend too much time with things that don't really lead to better performance. Be effective. It's always my mantra, to be honest. Yeah, for me, it's also IB. I mainly look, or what I'm really interested in is more about, am I running this account higher and higher and higher, right? And I paid from my run from late last year, I paid a good amount back, because with my momentum trading strategy, taking a few stop losses, all that, on a yearly basis, I paid a lot of back. And if I calculate then this for a monthly basis, it's still a good return. And so it's always a bit of a combination of everything, and taking all those variables into account and picking out what makes sense. But yeah, pretty much. I know if I aim for 10%, that is like 120% per year. And I would be also very happy with this account if it's just 100. And this is my main goal for on a year-to-year basis. And yeah, and then I can calculate my monthly even later. And so yeah, it's it's a complicated question, but it's a good one, really. So, good question. Good question. So look at that. I entered this trade. Let's do this. I don't have to search myself to death. And then go for the 1 hour. If I remember correctly, I entered the trade for the first time here. Then we saw the strength, and I decided to leave this trade around break even. It must be in Discord somewhere in the BTC channel. And then I said, I wait for a sweep and then re-enter. I remember order flow was not giving me any clear signals, so I was out at break even firstly. Then this broke down. And once this broke down, I re-entered here. We got the first sign of real weakness, breaking the structure. We got the retest here. I added size here. If I think this is pretty much how it was. And so my average was first up here. My stop loss was probably here. And then for the second entry, I put my stop loss above this high and added size. And I think it was about 2%, something like that. Not 100% sure. And it took me pretty much 2 tries. Maybe I was a bit too nervous for that, but I know sometimes those spikes, they can be a bit higher. My stop loss before was also like that. So I said, going out at break even, re-entering. In my situation, this makes a lot of sense because it was October, so it's not the time where I'm where I spend a lot of time outside. And so if I'm around the office, I can manage it more fluid. If I know I'm not around the office, I don't want to miss a trade. Or for example, like with ADA right now, sometimes I'm whole day outside on the mountain at this time of year. I don't want to come home and be stopped on 2 positions at once. So I remove risk earlier because I know I can't manage it manually as good. So it all depends on your decision. But I could have also played it easier by just entering, keeping it wider, accepting the trade as what it is. But in this case, I was in the office a lot, and so I played it like that, which makes sense to me because I managed risk. If the spike would have happened, I avoided a stop, could have still entered, and in this case, I just added a bit lower. And in the grand scheme of everything, it doesn't really make any difference now. I'm in this trade, and it turned out good. And the question of how I would do if I would be not in the short, how would I manage my risk on those longs? I would probably not go for 3%, but rather for 2 in the current situation. The short gives me more confidence in, for example, adding this 1%, and also just keeping those positions, staying in those positions, and managing risk a little more loose. So in ADA, I manage it tight now because it's an altcoin, and yeah, it's an altcoin. And ETH is also an altcoin, but it's a little more stable. And where's my high time frame position? Yeah. And I have more room. It's still like 9-10%. If ETH is moving 10%, it's already a big move. So those big candles, see, 15% can happen, but these are like the real big ones. And it still would not stop me out immediately. So I have a little more room. And with this short in mind, everything is just more, it's easier. It's not necessarily increasing size by a lot, maybe a little more confident, maybe giving it a little more size, even though I don't believe a lot in the setup, because as said, I think I expect more downside on higher time frame in general. So it gives me a little more confidence for a little more size, but overall it just makes me more at ease with the position itself, like from a mental game perspective. But yeah, sometimes you can, like in this, add 1%, also taking, so if I would have, for example, if I would have not have those big shorts from the US stock market top, I added 0.75% here, 0.75% here, and it's almost stopped, 0.75% on LOI. And this would mean 2.25%, and I would have not taken 2.25% if I would have not have all those shorts. I mean, I'm in a lot of shorts now, And so I wanted to balance this a bit and taking, like, instead of 0.5% longs, I took 0.75% longs, because otherwise it doesn't really hedge that much with all those shorts. Because even though all those shorts are in profit and probably not a single one will end in a stop loss because I can simply go out at break even, still I pay back unrealized gains, and I pay back less unrealized gains if I'm better hedged. And yeah, just brings me in a better position. So yeah, I adjust size a little bit, but not really that much. Okay, good session so far. Good questions. I would love to talk about one of your performances if you have. I mean, it's not a must. I don't want to push anyone. I know a group environment is always a bit more intimidating to share performance mistakes and all that. But in general, if someone has stats to share, and I don't want to see or talk about private numbers, I mean, private numbers are private. Nobody needs to talk about his size, but in percentage terms, how many trades did you take? What was your performance? Why do you think you perform good or bad? What was the R? Which market? All of those things can be in written form, can be in spoken form if somebody wants to. And if nobody has anything to show, we can also do something else, of course. I'll be right back. Give me 2 minutes. Okay, I'm back. Yeah, no worries. As said, this is not. I just wanna make this interactive as possible, because I see how it is if I work with mentees in private and we talk about all those numbers, sharing performance and all that. It helps a lot, and it actually, like, holding yourself accountable, being held accountable, looking at all that, reflecting on that, super important, because many people, I'm not saying you guys, but many people are trading for months and they're not even looking at their P&L. It's just like, oh yeah, this trade felt right, and I think I made some money here and there. And then if they look at their real stats, they paid hundreds of dollars in fees actually for opening 20 different trades in a 15-minute time frame or whatever, and stuff like that. So weird things happen, really. And I'm always talking and I'm always showing, but in the end, I want to make this a real group mentorship experience. And for that, we need to evaluate obviously also your things and your stats and statistics, and to make it really work. But in the end, it's not a must. Nobody is forced to do anything, but you should do it for yourself. And if you're then willing to share with the group and reflect together on it, Great for the others, great for you, I think. But yeah. Yeah, and as said, it's no pressure, but still, it doesn't really matter at which point you are. You want to see at the end of the month if what you did worked out or not. Is it profitable what you do? Is it not profitable? This is like the most important question. And if it is, you want to know why. And if it doesn't, you also want to know why. And this is, for example, why I don't care about too many statistics, because I know if I'm not profitable, I live off my trading, and I see my numbers every day, day in and day out. This is what I do for a living. I remember pretty much all of my trades. So for me, it would be just extra work that doesn't really lead to better results. For trades this week, 50% win rate, net loss setup of 4 net loss setup of 4 I don't really get that, Rooney. Maybe you can expand it a little bit. So you have 4 trades, you have a 50% win rate, which is good. 50% is something to aim for, to be honest. 50% is a good win rate. Setup of 4 was like your potential R. Yeah, potential R. So, and so what was the issue? So you have a 50% win rate. How can those two losers wreck you so much? How did the winners look? TP'd early. So you didn't TP on structure, you TP'd on what? Because if it's a potential for R setup and you have a 50% win rate, your potential first TP should, at least on those 2 trades, should then at least lead to a break-even result, statistically speaking. Because if I take a trade, so let's, for example, assume this ETH trade, this scalp, it's a 3R trade. I will most likely TP somewhere in this neighborhood, and then it's 1.5 R, maybe 2 R, right? And I TP maybe 50% because it's a scalp. So I make 1 R plus minus for my first TP, which means I made like the same amount I risked. So I have 1 R, and my stop loss will from this point on at break even, will be at break even. So simply speaking, I made 1 R and I'm then risk free. If the trade fails, I pay 1 R. But if I win one of those, I already paid for that. If you obviously TP way too early, doesn't work out. Yeah, if you want, you can share those trades with us if you still have them. All being the same sizing. Yeah, which time frames did you take it all on the same time frame? Was it a scalp? Mm-hmm. Yeah, do that. Hold yourself accountable in this. And this is like, it already reveals the first big thing, that looking at the data uh, is actually doing. It shows where you don't hold yourself accountable enough. And I ask those questions because these are the important questions. The numbers just reveal a deeper problem, which, for example, in this case was taking, maybe you stop too early, your TP too early. Maybe the setup wasn't like favorable, even though the target is 4R. The question is, was it reasonable to like target this even? We can only see this on the chart, for example. And then the question about sizing, is it like, have they been all like optimal, all being the same kind of optimal? Or was one less optimal, for example? And then with adjusted sizing, this problem could have been solved easily, because this is also the reason why this ETH loan for me, as I said, this is like, it's nothing compared to the size I have on this big trade. It's from a position size perspective, it's actually also very big, because this is a 13% stop loss, this is a 3% stop loss, but the position size doesn't matter in the end. My risk matters, and this is way smaller. And so if I lose this trade, it will not go into my higher time frame metrics, it will not involve it. But if I can make the higher time frame trade work better out, it might affect it a little bit, my monthly performance on higher time frame. But yeah, sizing is an important one. This is way less optimal than playing it wide. It's way riskier to playing it tight. Obviously, the stop loss is way more likely. So yeah, it goes all into sizing, of course. Yeah, do that. Sharing setups, maybe you can simply share them here. We can also create some new channels if you need performance reflection, whatever. Maybe we do that. It's actually a good idea. And then there is only charts putting in there, not setups before, but charts and setups being taken, the outcome, and the reflection for that. And you can just do this during the week if you take a trade. This is, for example, why I like doing my old setups here in Discord as well, because it actually structures it super nice. If I want to look up, for example, I can't remember in a month or two, I probably won't really remember what mu or form or this was. And then I have written something for me here to find it again, plus for you guys as well. So it's a win-win. And we can do that the same thing here as well. We can hold ourselves accountable, and you can share that first just for you. Maybe somebody else has something to say about that. And if not, we can talk about it in the session. I think it's actually a good idea. Yeah, great. So let's do that. And as said, as much as you want, should be no pressure, no nothing. And as said, also, if one of you wants to come on stage and we talk about this then together, no problem for me. We've done it before, worked out before, so can do it again. Yeah, I think the answer has been questioned, but I can just repeat it. It's important, like obviously, RR, like you said, trigger makes sense, but yeah, based on what? Best case, you put a chart next to it, because then we just see what happens in real time on the chart. The amount of risk, stop loss, like your size, 1%, 2%, 3%, and then a result, of course, how much R did you really pull out? What was the idea? Why didn't you reach your full R target? All of those things. And the amount of trades, for example, if you make a weekly statement, the amount of trades. If you make a monthly statement, the amount of trades. Obviously, if it's just a single trade, chart, risk, idea, outcome. Yeah, good idea, super good idea. This is actually also my first real trading account was exactly that. I did a lot of investments and higher time frame trading if you want so. And then for like futures trading, leverage trading, I made this one account. I only traded BTC. I tracked all my stats. I wrote all those essays, even publicly, reflections, everything about what I learned each week. This helped me so much, because this was just this one account, this one asset, no noise, no jumping around different markets, no different coins, but just executing one edge on one ticker in one account. And it gave me so much clarity about what I do and why, that yeah, this was my first account. It was not highly profitable, but it was profitable after 7 months, like 10% or something. Not something extreme, but this is my first trading account. I never burned a single account, and I'm actually very proud of that. And so super great idea. And you can, for example, do this futures account then with us here in the mentorship if you want to share that, because as said, I think it's super valuable also for the others to see. Okay, we're already at the end, I see. Any more questions? I will do the channel, the reflection channel. Obviously, it's your job to fill it. Obviously, no noise, and keep it like really for the reflections. So don't like 15 messages and don't start chatting in there or whatever. If you want to chat, create a thread or something. We can figure out the structure. It's always, we can plan what we want, but in the end, we will see how it develops once people start using it. And then we can work with threads or doing the discussions in the discussions channel, whatever, to keep this a bit clean, so we have really like the reflections, the setups, like really a clean journal. We can go over that and not like in between 100 messages talking about it. For that, we either make a thread or we use discussions. Whatever works better, we will figure out. Yeah, so I wish you all a great weekend. Thanks for joining today. We talk next week. Bye.